Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 29th of March, 2022. Alright everyone, let's get into it. So I'm super pumped today, and it's not just because of the ETH price going up, which is of course awesome to see, but I'm extremely pumped because today I visited the pools.invis.cloud website that Superfizz shared here on Twitter, and you can see that the Prism usage on the Beacon chain is actually down to 61.9%. It is lower than it was when I was kind of like talking to you guys about having the supermajority of 66%. And this is a huge win, guys. Like, I'm pretty sure this website updates weekly, and I think they're missing around 20 or 30,000 validators right now in their count, which is, I guess, like 10%. But I don't think that's going to make much of a difference here to this Prism usage percentage. Absolutely awesome to see. And I actually, just eyeing it, it seems to be Coinbase's Prism usage seems to be coming down. I believe that was over 90% last time I checked this website. Now it's at 85%. And I think Kraken's has come down slightly as well. But yeah, I mean, guys, this is a huge win right here. The fact that Prism is no longer the supermajority on the network, there's no client that has a supermajority on the Beacon chain at this point in time, is an absolute huge win for client diversity. Now, as I've been saying to you guys, ideally we want to get this kind of like below 60% in the best case, or at least in the kind of like most pragmatic case, below 50%. If we can do that before the merge happens, man, I think Superfizz is going to throw himself a party because he's been one of the big champions of this. But I think this is absolutely awesome. Like, I'm actually so happy about this. I saw this over the past, I think I saw it either late last night or today, and I was like, holy shit, like, this is awesome. Now, obviously, this is kind of like an estimation. It's not an exact science, but, you know, it's pretty good. It's I believe it's using Michael Sprow's kind of script to do this. And Michael Sproul, it works at Sigma Prime, who develops the Lighthouse client, and I've highlighted his threads before on the Refuel. But yeah, I was just really giddy about this because I explained to you guys what happened on the Kiln testnet where Prism had a bug where they were producing invalid blocks, and if that was to happen on mainnet and Prism was to still have the supermajority, it would basically result in a failed merge, right? So this is why we have the testnets and all that sort of stuff there. But if this happens on mainnet now, it won't lead to a kind of like failed merge because Prism doesn't have a supermajority. Yes, they still account for a large part of the network, and if this happened, it might lead to a large-scale slashing event, which is just as bad. But essentially, getting off the kind of like majority client seems to be a priority for a lot of people now, especially the exchanges. I'm waiting for the day that no centralized exchange or service provider has more than 50% Prism usage. That is probably a long way away still. I mean, Coinbase is still at 85%, Kraken's at 93%. But the fact that it's trending down is really good. And, at this point in time, for every new validator that Coinbase and Kraken spin up, they don't have to use the majority client anymore. As I've said to you guys before, there's 5 production-ready clients, but the 4 main ones, they're all pretty much as good as each other. There is no, from what I've seen, benefit to using the supermajority over one of the others. And there's actually like a lot of negatives, as I've explained before to you guys. So this got me super giddy today. And, the fact that it's happened on a day when the ETH price is doing really well is just a bonus there. But I spoke about the market yesterday, so I'm not going to rehash that today. But yeah, I'm curious to see if this keeps coming down and like at what rate it comes down at. I think it will, because as I said, I think at this point in time, the exchanges have heard about this sort of stuff now, and they're probably not going to be spinning up Prism, or at least the majority clients, for the foreseeable future. They'll spin up another client whenever they get to the point where they have to kind of spin up more clients. And I think a lot of individuals as well are using other clients, but yeah, we're going to have to see how it plays out going forward. As usual, Rocket Pool is doing amazing work here, only, under 10% Prism usage, which is awesome with 3,000 validators. They're growing quite nicely. Lido is the other kind of like leading staking pool, I guess you could say, but they're not, decentralized like Rocket Pool is, but they're doing quite well as well. Like, they still have 40% Prism usage, but that's under the 50% threshold, which is, in the most pragmatic kind of like sense, I think that one of the clients having 50% is probably going to persist for a while. It's just the way it is, guys. Like, honestly, I think that it's never going to be like an even 25% split between the 4 clients or 20% split between the 5 clients. That's just not how these things work. So, as I said before, if we have 50% Prism, and then kind of like 30% Lighthouse and 10% Teku and 10% Nimbus, and maybe, or maybe there's a little bit of a couple of percent of Lodestar, then that is just as good as having, in my eyes, 25, 25, 25, 25, because we're never going to get to that. Like, we have to think about what's practical rather than what's ideal. And we can keep pushing, don't get me wrong, we can keep pushing for that. We can keep seeing how we can get to that, but I don't think that we're going to get to that kind of like ideal world. I think we can get to the pragmatic world where Prism and no one client accounts for more than 50%. And it's awesome so far that we're actually doing much better than the execution layer side, which still needs client diversity, mind you. But last time I checked, Geth accounts for, I think, 80% or something like that of the let me have a look here of the clients. I'm just loading up ethernodes.org here on my other screen. So Geth is currently 83% of the network. So yeah, that's obviously not ideal as well there, but it is less of a concern for the execution layer than it is for the consensus layer because there aren't any direct penalties. There's no slashing, obviously, in mining. And on the execution layer side, I mean, post-merge is going to be a different kind of like calculus there. So, I would encourage a lot of people to run the non-majority clients on either side. If you're a solo staker, you're obviously going to be running both the execution client and consensus client. So an ideal setup would be, something like Lighthouse and Nethermind, for example, right? Rather than Prism and Geth, right? But yeah, totally up to you what one you want to go with, and you can mix and match and all those sorts of things. As I said, like the clients are just as good as each other. There is no real benefit to going the majority over the other things. There's actually a lot of negatives that come with it there. All right, actually, I've got something here I want to talk about a bit later because there's a couple of other Ethereum-related things I want to talk about first. So I put out this tweet today where I said, Ethereum having a 7-year-long proof-of-work distribution phase before switching to proof-of-stake is something that not a lot of people think about, but it is critically important for Ethereum's future. I wrote today's newsletter about this, so if you want to kind of go read that for a little bit more detail, you can, but I'll give a kind of like TLDR on the refuel. So Ethereum Genesis happened July 30th, 2015. It has been a proof-of-work network since then. It has been producing blocks every, I guess like 15 or so seconds. Today it's like 13, and I guess like block times have varied over the years due to the difficulty bomb as well. And every time a block has been produced, there's been an ETH block reward attached to that. It started out at 5 ETH per block, then it was 3 ETH per block. Currently it's 2 ETH per block, and after the merge, it's going to drop dramatically. I'm not sure exactly what it is on the per block basis right now. I should know this, but it's going to drop like, the 80 to 90% triple halvening that we're talking about here. Now, because of this, and because Ethereum is currently a proof-of-work network, it's led to a really great distribution for ETH as an asset. So I'm going to give you an example of Ethereum and how this has worked with Ethereum, and an example from a network that starts as proof of stake from day one, and why I think Ethereum's long proof of work distribution phase has been so beneficial. So miners, they have costs, right? They have plenty of costs. They have electricity, they have hardware, they have maintenance, they have personnel, they have to rent out space. They've got costs coming out of everywhere. To cover those costs, they have to sell some of the ETH that they mine, or BTC, or whatever else they're mining, right? They have to sell the asset that they're mining to cover those costs. Those are basically costs that are unavoidable, right? There is no way for them to basically say, no, I'm not going to pay my electricity bill, because then they wouldn't be getting electricity and they get cut off, right? And then they lose out completely there. So in doing that, they're selling it into the open market. It's going to either long-term investors or speculators, and it's going through the kind of like motions of a market cycle. And speaking of market cycles as well, that has also played a big part in ETH's distribution over the years, because I mean, ETH's price has gone nuts over the years, right? Like not just from ICO to today, but also the volatility. So it started off from the ICO at 30 cents, right? We all wish we could have bought ETH at 30 cents, but it was at 30 cents. Then I believe for a while there, it went to like $5 in when it launched in 2015 or something like that. And then in 2016, during the DAO, it went up to like $25. And then it came back down to, I think it was $6 or $7, something like that. And then obviously 2017, it went all the way up to, I guess, $1,400, $1,420. Then it came down to $80, then back up to $4,400, and then down to $1,700, then to $4,900, then down to like, the low 2000s. And now back up to $3,400. And this isn't counting all the extreme wild volatility that has happened over those years. Now, during all of that, the ETH has been moving around. It's being distributed to different parties. It's going from short-term speculators to long-term investors. It's going from people kind of like capitulating to people who have stronger hands, all these sorts of things, right? So that's worked, to distribute ETH as well. But the proof of work phase has just kind of like compounded that because of the fact that the miners are just kind of like constantly selling ETH, right? They're not hoarding it. They're hoarding their profits. Don't get me wrong, especially as we're approaching proof of stake. A lot of them are stakers, but they're not able to hoard it all because they have to pay to cover their costs. So I think that has been extremely beneficial. It has made Ethereum, going into proof of stake, a more equitable and distributed network. It's going to make it a more decentralized network. And also it has bred a better social layer, in my opinion. Now, let's take the flip side. Let's look at a network that launches as proof of stake from day one. A lot of these layer one networks have very heavy insider distribution. Some of them are so bad that they have a very small public allocation. Now, because they're proof of stake from day one, what ends up happening is that these insiders are literally staking from day one. Not even before their tokens are unlocked, even before their tokens are vested, it's in staking a lot of the time. So they're earning rewards and they're probably selling those rewards. They have to sell for tax purposes. Obviously stakers don't have much of a cost. It depends on the network. I mean, not all proof of stake is created equal. Something like a Solana proof of stake, which is like a delegated version where that has like beefy hardware, there's obviously a much more cost involved there. But something like an Ethereum proof of stake, it's very different because the hardware costs are very minimal. It's very cheap to run. So really, the only time you're really going to be selling ETH is to cover taxes at the end of the day. So those are little differences there. But you have these insiders who don't distribute this at all. Like the early buyers are just going to perpetually stake. Why would they sell their stake? They can just sell the rewards. It's all well and good. Maybe they'll sell some of it to return some money as part of their fund, right? If they're a VC or a fund, to their investors, things like that. But they usually have such a large chunk of the supply that they're earning a lot of rewards from these networks. And especially during bull markets where these networks kind of go up spectacularly in value, those rewards can become very, very lucrative from there. So there's no distribution phase. There's no proof of work distribution phase. The only distribution that happens is the selling of the rewards, really. And calling it a pre-mine is accurate. The pre-mine is never distributed. Whereas, not to say never distributed, but it's not distributed in the same way Ethereum's quote-unquote pre-mine was. Because when you think about it, the Ethereum ICO was a pre-mine, right? But you'd be hard pressed to find many people that are still holding their ETH tokens from the ICO. And it's not even just about people; it's about kind of like the percent of ETH that hasn't actually changed hands since ICO. It's a very, very small percentage, and there's actually on-chain data that you can look for this. And last time I checked, you would have to look at ETH that hasn't been... The only way you could really do it is looking at ETH that hasn't been moved in a certain amount of time. And I think the amount of ETH that hasn't been moved in 5 years or more is maybe 5% or something like that. So it's a really small portion of the supply that hasn't moved. But that's not to say that all the supply that is moved has been sold. But really, I mean, anyone who's held ETH from 30 cents to now without selling any of it, from ICO to now without selling any of it, was already rich to begin with. Those are the only people who wouldn't sell ETH at least a bit of it in my eyes, because that's life-changing money for anyone. Even if you put in $1,000, that's millions of dollars just from the ICO. So I think when you think about it like that, and you think about all the market cycles and volatility, and you think about the proof of work distribution on top of that, with the miners having to sell, Ethereum is going into the proof of stake merge very, very strongly. It's not going to be insider kind of like dominated. There's not going to be massive VCs or funds staking kind of like their ETH and things like that. A lot of it is simply individuals. And yes, there's exchanges that have large ETH stakes, but those exchanges are not, it's not belonging to that exchange themselves. Like it's not Coinbase. It's not like Coinbase is staking, all this ETH. It's their customers doing that. Yes, they control the validators, but it's still their customers' ETH at the end of the day. Those customers will either choose to sell that ETH when it goes up, sell the rewards, or unstake and just keep it in cold storage if they want to, or, do whatever else with it. So I think not a lot of people talk about this, but as I said, it is critically important for Ethereum's future, because I'd be much less bullish on Ethereum if it started off as a proof of stake network, because of the fact that it would be heavily insider dominated, and it wouldn't be that great. And, even Vitalik, for example, he hasn't staked much of his ETH, I think because of the fact that he doesn't want to kind of like, from his public address, he doesn't want people seeing that he's like a large chunk of the network or anything like that, but he has about 300,000 ETH. And even if he staked that, if he staked 300,000 ETH today, he would get about 1,000 validators or something like that, right? That is not a large chunk of the network. That's not even 1% of the network. I believe, if I'm doing the math correctly, it would be around 0.3% of the network. And Vitalik, I don't believe is the largest ETH holder. I think the largest single ETH holder would probably be Joe Lubin or one of the billion-dollar funds, but the funds always are like trading in and out of it, so I'm not sure there. But I would say that Joe Lubin is probably still the biggest ETH holder out there. And look, there could be worse ETH holders, right? He's not a VC, he's not a fund. He's actually building a company that's trying to kind of grow Ethereum. So I think there could be worse people than that. But I mean, Joe Lubin was also forced to sell a lot of his ETH to cover cost of consensus too. So he distributed his ETH out into the wild as well. And I don't think he has anywhere near the amount of ETH that he had from the ICO anymore. But he'd still be one of the largest holders, of course. But yeah, as I said, like the power distribution phase, and especially coupled with the market cycles, has really done wonders for ETH distribution, and it's going to make us going to the proof of stake merger a lot stronger there. All right, so speaking about the merge, Trent Van Epps has another killer thread about it, which is kind of like starting off by saying, ongoing thread for Ethereum merge info. So you can see here some of the things like unburnt fees going to, I guess, block producers or stakers post-merge. It links to the EIPs for withdrawals, post-merge, blocks being 12 seconds into 13 seconds, blah, blah, blah. I'm not going to read it all out for you, but go check out this thread. It's got a bunch of more information about the merge, which is obviously the biggest thing happening in crypto right now. I mean, it's the biggest thing happening in crypto this year. I actually think in 2021, besides NFTs, EIP 1559 was the biggest thing that happened in crypto in terms of kind of like the impact that it had across the board. I think the merge is that for 2022, coupled with the layer 2 stuff. The layer 2 stuff is still trotting along, guys. Like, all the kind of metrics are going up for layer 2s right now, and they still don't have tokens. Like, I'm kind of in two minds about them having tokens or not. Like, if they were to drop a token right now, it would actually be like pretty good for valuations and things like that. But how good it would be for distribution and kind of like getting people bought into the ecosystem, that's another question altogether. But I think that the longer they go without dropping a token and the more natural growth that they have, the better it is. Especially because they're going to be able to airdrop these tokens to a wider set of people as well, because more people will use these things. I don't know. Like, I'm very happy with where layer 2s are today. That's for sure. And on top of that, I'm obviously very happy on the progress being made with the merge, all the stuff going on there, which I've covered a million times on the refuel. I'm not gonna go through that all here. But yeah, definitely check out this thread. I'll link it in the YouTube description for you, because Trent, puts together these things. He's very, very good at getting his point across, and I recommend giving it a read. All right, something that's not directly Ethereum related, but that Jake Shavinsky shared today on Twitter, and he said on Twitter, the SEC just proposed a rule that would expand the definition of regulated dealers to include people who employ passive market-making strategies that have the effect of providing liquidity to others. It's 200 pages, but doesn't say DeFi even once. Now, obviously, this is DeFi, right? I mean, employ passive market-making strategies to the effect of providing liquidity is literally what you do with Uniswap and AMMs and things like that. So they don't have to say DeFi. It obviously is targeting DeFi here. And that's just 200 pages. I'm not going to read this at all. Like, you guys know my opinion on the SEC. I don't respect them. I don't think anyone respects them. I think it is a joke of a regulatory body. And I think that until they have a better chair at the head of them, because Gary Gensler is a complete joke, I don't think they're going to get the respect that they want here. So this is obviously just a proposal. It hasn't gone through. I don't know if it's going to even go through. These things kind of like come to the table all the time, but this is obviously not a great proposal. It's more of the same as we've seen from the SEC. They seem to be just kind of like clamping down on whatever they can. Honestly, the kind of like, what's the word I'm looking for? The cynicist within me thinks that, I don't know if it's Gary Gensler or others within the SEC. They're just kind of like in the pockets of someone. Like, surely they can't look at all this stuff happening, all this innovation happening on their shores as well, and be thinking to themselves, oh, it's a really good idea to go after legitimate companies in crypto such as Uniswap Labs instead of all the bloody scammers. Like, I've ranted on about this so many times. I'm not going to go on about it again, but they are a joke of an organization, joke of a regulatory body. I don't respect them. I'm sure you guys don't respect them either. They haven't done anything to protect any investors in my eyes. All they've really done is kind of like find a couple of things and put out bullshit upon bullshit. It just really hasn't done any good for anyone. I'm not going to rant, but yeah, you can check out this if you want, this this 200-page proposal, which I'm sure you're not going to check out because it's just total crap and a lot of lawyers speak and all that sort of stuff. But yeah, I just wanted to kind of like highlight this. I'll keep tabs on it. I'll let you guys know if it makes any movements anywhere. I highly doubt it will. Like, I actually don't think that there's going to be any kind of like thing that comes out of this, but it's always good to keep tabs on this sort of stuff. All right, we have a fresh new thread from Bartek today, diving into what Optimisms core data compression actually means and how it all works. This is a technical deep dive. It's a thread. Go check it out. I actually learned a lot from this. I mean, it's not a long thread, but I actually learned a lot myself as well, which is really cool to see. I think the thing that Bartek wanted to highlight here is that right now you're basically trusting the centralized sequencer that Optimism has to do this correctly and to basically post what they're saying they're posting to layer 1 Ethereum correctly here. But you can use the script that they provide to decompress the data for yourself that gets posted to layer 1 in order to kind of like verify the information. But until the new fraud system is in place, which is called Canon, it's not going to be done in a very trustless or decentralized way. But you guys know that. We all know that. We all know the training wheels are still on. We all know these things are still early days, and that's all well and good there. But definitely check out this thread from Bartek for a deeper technical dive on kind of like Optimism's core data compression, which I covered last week on the Refuel. It's a really, really great little deep dive here. So speaking of deep dives, Argent posted a blog post today titled WTF is account abstraction. Now, I think I've covered account abstraction before, but basically, I guess like the TLDR is that what it does is there's two different types of accounts in Ethereum, as you can see here stipulated in the blog post: externally owned accounts and contract accounts. Now, externally owned accounts is basically just a regular Ethereum address that you and I have. A contract account is, as it's self-explanatory, a smart contract account, basically. So, for example, a smart contract wallet such as a multi-sig would be a smart contract account. It would not be an externally owned account. Now, externally owned accounts control smart contract accounts. They interact with them, and smart contract accounts may be a misnomer there, but smart contracts basically on Ethereum is just a different account type. Now, this leads to a few different kind of things that are kind of like a pain point, and that's why people have been wanting to do account abstraction. To do it on layer 1 Ethereum, it's been wanted to be done for a while now, but I think it took a backseat to things like the merge. I'm not sure how feasible it is to do it or how desirable it is to do it on layer 1 Ethereum, but on layer 2, it can be done very, very easily because, as I said to you guys, layer 2 operators have much more control over their system than they would on layer 1, obviously because layer 1 is decentralized and layer 2s are still very centralized, but yeah, so this blog post gives you kind of like a full breakdown of what it is. I'm not going to try explaining it on the Refuel because I want you to read the post, as it's a better explainer that I could give you. But yeah, it's also, I don't think it's too technical. I think it's high level here, but yeah, go give this post a read. I'll link you in the YouTube description below. All right, so Polygon is teasing something new today again about privacy. So they say here, privacy takes center stage, and I think they're announcing this today, I believe. They may have already announced it. No, they haven't announced it yet. So I believe they're announcing this today, and I'm just recording the Refuel too early, so I'll probably cover this in tomorrow's Refuel. But yeah, keep an eye on Polygon's Twitter account and all their channels to see what they're kind of like doing with this. This is really cool. I mean, Polygon already has Nightfall, which is kind of like a hybrid, I guess, like privacy roll-up sort of thing going on there. They have a lot of the ZK stuff that they're doing. I'm very curious to see if this is going to be, it seems like it's going to be another solution that's kind of like separate to all of that, which is going to be cool. So we'll see what kind of like happens there. I'll keep you guys updated on this. I'm sure you're going to see it before I cover it on tomorrow's Refuel. But yeah, just keep an eye on Polygon's Twitter account there today. All right, so Niftychat has announced that they have raised a $1 million funding round led by Archetype venture VC fund here, with participation from a bunch of angels, myself included, so disclosure there. So basically, what is Niftychat? It's a Web3 chat platform. As I've been covering a lot of these recently, there was Orbis, and then there was the Etherscan chat, which wasn't exactly decentralized Web3 chat, but these things are making more and more waves within crypto, especially things like decentralized social media, and we now kind of like have better and better tools to build this sort of stuff. So you can go to nifty.chat here. You can see I'm already logged in with sassel.eth on my screen here, and you can see there's different channels. I mean, it looks very similar to Discord, right? You can see basically the chat pane here with a bunch of channels on the left, and you've got different servers here. So I'm currently in the Niftychat server and the ENS server, and there's a bunch of useful information around here, such as how many people are in here, the gas price, things like who's online and stuff like that, and how many people have said GM. Now, the reason why I think this is really cool and the reason why I backed it was because I'm really bullish on decentralized chat applications, because at the end of the day, there is a lot of chat applications out there today, but none of them are decentralized from what I can tell. There are some that do end-to-end encrypted messaging, like Signal, for example. Telegram is very popular, but still, they're not very decentralized. They're not Web3 native, and that means they can't integrate with Web3 native features. So for example, you have to use kind of like third-party tools to do things like NFT gating of channels. Whereas with Niftychat, you don't have to do that. It is a direct Web3 platform, and it can just read your Ethereum address and basically the state of your Ethereum address or account and basically say, okay, well, you have this NFT, you're allowed into this channel. Oh, okay, you don't have this NFT anymore. Well, you're not allowed in this channel, all in a decentralized way, right, guys? Because it's done on the Ethereum blockchain. So I just really love the idea behind this. I'm really thrilled to be a supporter of them. Really excited to see where they go with this and kind of like, what the adoption cycle looks like for this. I still think overall, some of this stuff may be too early, but at the same time, I think it's less early than what it was. I think the next few years, I definitely think as we scale more and as more of this infrastructure comes into play, we're going to see more of these decentralized social media platforms come into play. And I think having a chat app is at the forefront of that, because building a decentralized social media platform is much more complex from a various different kind of like angles than building a decentralized chat application. But in my mind, they're two distinctly separate things, and the chat application is just as important. So very excited for this. Definitely log into this and check it out. I mean, all you have to do to log in is sign in with Ethereum. You just sign in with MetaMask or one of the other wallet providers that they have, and you can get started straight away. You can, in all the channels like Lounge, Whales, Suggestions, and Support. I mean, the cool thing is you could have a channel here that says, okay, well, I mean, going off the whale theme, only show this channel to people who have a certain number of tokens, and those will be the whales of your protocol. They obviously have a lot of skin in the game, and they can have their own little private whale chat going on there, all in a decentralized way. By the way, guys, like no one needs to manage this. It's all read by reading the state of the account. So those native integrations, I think, are going to be very important going forward. So I'm very much looking forward to that. But definitely go check this out. I'll link it in the YouTube description. All right, finally here, I just got a quick shout out that Zapper is currently hiring for a bunch of different people. So they're hiring for an Android developer, a product designer, and a brand strategist. But if your experience doesn't fit the above roles, you can DM Seb from Zapper anyway. If you're good, as he says. Goes back to what I was saying before, guys. It doesn't matter if you can't find an exact role to fit your skill set when looking on these crypto jobs websites or looking on really anywhere, and job boards, things like that. Literally, you can actually jump into a Discord channel these days and make a role for yourself. If you're filling in a role that a project needs, or if you're filling in a niche that a project needs, if you do good enough work, they're probably just going to hire you anyway. And even if it is a casual or part-time basis, they're usually going to pay you in tokens as well. So if the project's doing really well and you hold onto the tokens, you can have lots of upside in that from just kind of like creating a role for yourself. So if you don't fit any of these roles, yeah, definitely DM Seb. I mean, working for Zapper, honestly, I mean, you guys know I'm an investor in Zapper. I've been a user and lover of Zapper for a very long time. They've got a kick-ass team there, so it's probably one of the best teams to work for in the crypto ecosystem. So if you do feel those skill sets, definitely DM Seb. But even if you don't, kind of like DM him anyway, if you think you can fit in anywhere else there. But I think on that note, that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.